The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we saw the Wednesday trade action wrap up, kind of two-sided in corn and wheat. Soybeans found a little strength, a good day in the cattle trade. Plenty of news notes to kind of unpack here in this market as we head towards the Memorial Day holiday weekend. Joining us for our weekly conversation, Mike Zuzolo with Global Commodity Analytics is with us here on Market Talk. Mike, thanks for being with us again this week. And I know a lot for us to talk about. I think in general, market trade was kind of just a mixed bag. Not a ton of fresh news across the board Wednesday, but we did find some green on the screen in a few places.
Yeah, it's one of those weeks again, like last week, where we had a soft red wheat tour in Illinois. It was only a one-day tour, and I think they only looked at something like 50 fields in southern Illinois, where most of the soft red wheat for the state is grown. And they came in over 100 bushels on the yield, and USDA, I think, is for Illinois, the whole state is like 83. And it was kind of like the hard red wheat tour, Groundhog Day all over again a week ago, where that just seemed to kind of put the kibosh on the ability of the U.S. wheat to continue to follow the Paris wheat higher. And like last week, today on Wednesday, we did see the Paris wheat go higher and make a new, I think it was a new 10-month high, the highest since July of last year at one point. And so I think that set the tone, Jesse, and it wasn't nearly as easy to see the overall risk on trade in the grains like we saw on Monday, led by the wheat. And so I suspect some of this also has to do with the corn planting weather here in the States and the big daddy out there, the Memorial Day holiday coming up, that 3-day weekend coming up, and traders getting more and more anxious and nervous ahead of that.
Well, you mentioned that risk on type of trade in grains, and hard to see that Wednesday, but I know you have some great analysis that we could take a look at here that kind of points to that. And let's start. And I know you were mentioning this to me off the air, just some of what we're watching in the metals, for instance, right now, some of the correlations with that versus, say, the wheat trade. This is a copper wheat chart here that we're looking at. Let's start this conversation. Set this up for us. What are you seeing right now between these markets, Mike?
You're getting a pullback in the copper. You're getting a pullback in the gold here at midweek, and I'd put a lot of that and lay a lot of that at the feet of the Federal Reserve minutes getting ready to come out on Wednesday afternoon as we're getting this taped and laying this down. I think the risk-on general mindset has taken a breather until they find out more about what the Fed policy is going to be. I think the other thing that really kind of speaks to me right now, Jesse, is, as we've talked about before, the emerging markets have led us higher. Some of the emerging market data that I keep track of is at its highest level since the later part of 2022, so almost a 2-year high in some of the data that I keep track of. And I think that would explain why that copper chart in blue has been able to go above $5 again this week and make another all-time record high, with gold following it. And that again was on Monday, early Tuesday. And as you see, the soft red wheat continues to follow that. And so wheat is getting some of that benefit of the risk on trade, in my opinion, with the relationship on an 8-week basis between those two assets still running almost 85-90% positive with one another. And so I really want to point out to the clients and subscribers that I work with and here on today's show once again that you've got two streams running in terms of what's fueling this move up in the wheat market, in my opinion. One is the good old-fashioned supply-demand fundamentals that we finally came around to, those really tight stocks-to-use ratios globally, thanks in large part to Russia, Ukraine. But we also have this investment demand coming in, this rotation, this play of the inflation attracting more commodity investment. And so it's important, I think, to keep an eye on both of these tracks, both of these streams, not just one or the other.
You mentioned EU wheat and some of the moves there that we saw this week. Let's pull up another chart, look at EU versus U.S. futures, and talk a little bit more about that, because I tend to agree with you on this. You know, we keep seeing some of these price moves in Europe, yet U.S. futures kind of getting capped for various reasons here as we move forward, Mike.
Yeah, and you notice the soft red wheat has taken over as the leader to the upside versus the hard red wheat as of last week. This makes sense because where the funds are the biggest net shorts is in volume wise is soft red wheat, and based upon my research. And the soft red wheat in Chicago works really well with the milling wheat here in Europe, as we see here on this chart, I should say, in that EU milling wheat futures market. When I talk to clients and tell them that EU futures is trading in lead month, which is a little bit farther out than our July, upwards of 760, 770, 780 a bushel US dollars. And that seems to make a lot more sense to him as far as why we continue to see this wheat market go, even though generally speaking, we have no weather play here in this country at this point for either the hard red or the soft red. It's really about the Black Sea, and it's really about some of the other key areas of the world, including Argentina and including southern Brazil, where the flooding has been so damaged because that's a big wheat area as well.
You mentioned the Black Sea region in Russia and the weather over there. It continues to really be that big focus. I agree with you on that. Let's talk a little bit more about that and put some of this into perspective. What is some of the latest you are hearing about some of the concerns, both drought and frost concerns we've heard about in parts of Russia as well, Mike?
Yeah, the map here is a NOAA map that I added the drought severity map, and then layered on top of that in green the crop mask where all the intense cropping is done for that region that we're looking at. And so from left to right, you're essentially looking at Western Central Europe, and then right in the middle of the chart in the map is Ukraine and Eastern Europe, and then that goes into Russia. And the three boxes that I have there, two blue and one purple, the two blue ones are the ones that are or did get a little bit of rainfall and relax the drought issues. But as you say, the frost issue and the continuing lingering drought problems that we have going all the way into deep next week on this current runs on the weather models, Jesse, that purple rectangle kind of highlights that. And what this map really shows me is we've got a lot of weather still to play out in Russia, in Ukraine, and it's no coincidence that the Russian central bank just came out today and stated that wheat could play a more negative influence on the overall inflation in Russia. And so that is kind of the last piece of the puzzle of this dynamic you and I have talked about for 8, 9 months is how can Russia be growing this size of a wheat crop? How can they be exporting this size of a wheat crop, especially with their new 24-25 looking as damaged as it now is, both in drought and in freeze? And I think this goes back to them increasing their export tax by about 3.5% starting tomorrow, if I remember right, and that their May exports so far of wheat are down substantially versus the same time period last year. And so to me, we've got a story still developing, and it would lead me, all of these things would lead me to the idea, unless the Federal Reserve does something on Wednesday to shut down the risk on trade, or a big change in weather would occur, I don't see an end to this wheat-led rally yet, but I still want that dollar to come in and put a high in place and give me some breathing room for another leg up.
And I'll say this just to add on to the wheat side of this real quick before we shift our discussion, thinking about Russia, Mike, not to get overly political or anything here, but when you pose the question, how can Russia be growing, some of these sizable crops, and will we ever really know the true number out of Russia? I think that's a big thing that this market has to take into account and digest a little bit as well.
I think that's right. And there's been more than one news group that has been able to isolate wheat and crude oil ghost ships that have been offloading Ukrainian oil or Russian oil that don't that are getting out from underneath the sanctions in the case of oil. And so there is a lot of supply questions over the last 2 years when it comes to that Black Sea crop and how much was Russia's and how much was Ukraine's.
Well, we are having a conversation today with Mike Zuzolo from Global Commodity Analytics here on Market Talk. Mike, I want to touch in quartered soybeans real quick. I know we don't have any charts for those today, but In the case of soybeans, a good day Wednesday. Although I look at like July beans on a chart and 1250, that round number just feels like it continues to be a big brick wall over top of soybeans right now. What do you think?
I agree with that. If the wheat and the corn can't carry the load here, Jesse, I think one of the things that happened on Tuesday was that technically we were heading towards the weekly low in July beans. And keep in mind, the July beans have been upwards of 30 cents premium to the November. We've built a bigger inversion in the July, of bigger premium in the July, suggesting we either have too little supply or too much demand. I think that's Rio Grande do Sul in southern Brazil being priced in that old crop July. So I do think there is a premium in that July bean, and it was supported by the idea that those weekly lows held. Why? I think in large part because we heard that China came in and swooped in and maybe got two, maybe three cargoes of U.S. soybeans. That again supports the idea of keeping the premium in July, because why would China buy our beans other than the fact that Paranagua's price is going sky high now because of the flooding situation. So I think it's a very tight, well-fitting story when it comes to soybeans. My biggest hope is that the wheat and the corn lead this market up another leg. If they don't after the weekend holiday, I think the beans are the most susceptible to the downside, and that would be mainly because of the demand side of the equation, and that makes Thursday's weekly export sales very important. But it also is because we don't know what the crop weather is going to end up being here in the United States. We're still 22 points behind in corn planting in Illinois, 21 in Missouri, 14 in Iowa. They're making some strides right now, but who's to say we won't still see some prevent plant and push more bean acres onto the table? So I still like hedging the beans more aggressively than the corn and wheat. I'm giving the beans a pause here on the hedging to see if the corn and wheat can take us up another leg.
You read my mind on the prevent plant equation there, Mike. I was going to ask you about that. I've heard a little bit of rumbling. I mean, you look at the calendar. I was impressed with the advances we made last week in terms of the crop progress report numbers. That surprised me a little bit, but I'm hearing some of that chatter about maybe some prevent plant as this calendar ticks farther along towards the month of June.
I am too, and it's because we are missing our optimal 181 national yield, that top end corn yield. We have to have almost perfect weather from here on out and get it. The guys get it in the production side. We're almost at $12 new crop cash beans. It's not hard unless you've got your chemicals or your fertilizer already down for corn. It's not hard to jump over to soybeans at this point, given the price you're getting for new crop versus new crop corn.
Let's talk livestock. Cattle had a really good day Wednesday. I know boxed beef has been a big driver in this market here in the last week plus. Let's take a look at this chart, looking at cash cattle futures. Just walk us through what you're seeing on this chart first as we kind of take a hard look here at this cattle trade right now.
Yeah, I think you set it up really well, Jesse, because the box beef and that surprising move up in the choice versus the select to 13, 14, $15 premium really told the market that we do have good packer demand and that the packers are coming in for that holiday weekend buying starting last week. And it's just continued to get stronger. Retail numbers from USDA on the featuring also supported on the activity updates on Friday afternoons each week. So now we're sitting with a very lightly tested situation of almost 192 on negotiated cash fat cattle, while the June fat cattle are sitting at 184, and that's your green bar. We're getting very close to filling the gap from back about a month ago, where we dropped from 185 straight down when the April went off the board and the June took over as lead month. So we're filling up that gap from where the April left and the June took over. And now the question is, can the June continue to go higher and make up even more of the gap between the cash and the futures and get back towards that 188, 190 level? There's two things stopping that from happening right now, other than the fact that we're getting through the first summer grilling season weekend, and that buying is probably going to slow down a little bit. And that is the cattle on feed report, and that is the May futures expiration of May feeders, with both happening on Friday, both happening before we have to sit and deal with it for 3 days before we can trade it.
And that's a great point, to have it to sit an extra day to trade, especially that cattle on feed report. It's going to be Very interesting, I think, for this market. One more chart I want to talk about here. Pull this up. Walk us through what you're seeing with this chart on the cattle side, Mike.
I think if you look at this market and the fat cattle market and the ability of the futures market to follow the cash, the biggest question I would have in my mind would be, how did it do that? It was not the hog market that did it. The hogs have been working against the fat cattle. It's really been about the feeders and the corn market taking a pause and the feeders being able to rally. And so my sense, especially given the fact that the trade is going into Friday's report with a on-feed May 1 number below 100% and a marketings number for April of an average of almost 110%, we really need the feeders on our side at this point to be able to keep closing that gap between June futures and the negotiated cash price. So what this chart shows us is you've got a bar chart here of the feeder cattle cash index from the Mercantile Exchange. Also on top of that, you have a flat line at 250.35 of where May feeders is, and then you've got a red flat line above that at 262.80 where August feeders essentially closed on Wednesday's trade. And so Friday, May feeders goes off the board. It's got about a $3 premium roughly to the cash index. Then the August takes over as lead month futures at almost 263, and you're talking about a 16 plus dollar premium in the August feeders against the cash index. And I just want to see how strong these feeders can be once the May goes off the board and whether they really do support the fat cattle or not. And I think a lot of that's going to be decided in those placements numbers.
I would ask you here, with the added uncertainty of getting a cattle on feed report, those numbers you mentioned, and heading into a 3-day holiday weekend, am I managing a little more risk than normal here in the cattle trade at these levels right now, Mike?
Yeah, if you're not in the cattle and you don't want to sell a discount in the June, I can understand that because you've got your negotiated cash, $6-7 higher right now. But stay current on your cash on your fat cattle and look at maybe some August puts in the feeders. And I say that and suggest that because it's not just about what I just showed you on the difference between the August and the May and the cash index. It also goes back to the fact that last week's weekly kill numbers showed a 2-pound increase in dressed weights. We're now 35 pounds ahead of last year at the same time ago. And so that says to me, we've got the supply. We're backing up the marketing some by adding another 2 pounds. We do have an ample supply for the summer grilling season. And so I think this is where the feeder cattle market is kind of a must have for the fats, unless those hogs really want to turn around and shoot $4, $5, $6 higher and take all the pressure off. So my sense right now is if you need to get some risk management done, it should probably be in the August feeders, given that they are back to that 263 area.
You mentioned hogs too, real quick. Hogs continue to trouble me as I look at futures. Any other notes for us in the hog trade right now, Mike?
Yeah, they haven't been playing ball with the Chinese strength. Copper has, soybeans have, and China has not come back and retaliated against our recent tariff hikes against EV batteries and medical supplies and so on and so forth. But if that's the case, it makes me think that the trade's really nervous about the pork exports as we get into summertime for the United States. And so I want to keep an eye on that. I think I'll stick with what I've talked about the last month or two, Jesse. For me, it's still about China and it's about the US dollar breaking. And if we can't get a break in the US dollar, we're probably hemmed in the hog market. Those old highs will probably last and stay around at least until we get to that BLT seasonal, the bacon, lettuce, tomato seasonal, when the tomatoes come on and we see a lot of bacon that should be featured. And that's been a season that's worked fairly well for me these past couple of years.
You made me hungry. I love the BLT seasonal, Mike. We've talked about that before. That's always my favorite time of the year. Let's wrap up our conversation today. Final thoughts from you. Anything else you want to mention or reiterate to folks who are listening in today?
Yeah, as far as the weather market goes, this is kind of shooting from the hip and spitballing here, but I was troubled all week long, wondering whether the trade would want to put some weather premium in before the holiday or wait until they got the crop conditions and planting progress numbers all the way back to next Tuesday. I think we'll probably find that out on Thursday's trade because the weather models got a lot wetter for Illinois, Missouri, Iowa, Indiana, and Ohio. Both the GFS and the Euro model both got wetter for those areas on the noontime Wednesday updates. If that matters to the trade, I think they want to add a little bit of risk premium, maybe stop selling corn and buying beans and just go ahead and keep their bean positions or unwind that spread. So if we see a shift in the corn market to a higher price action, we're probably adding some U.S. weather premium before the holiday. Otherwise, we're probably going to have to wait till after we come back.
Mike, if folks want to reach out to you, if they have questions, want to take a look at your analysis and more, I know they could find you very easily online or with a phone call. How can they reach you?
globalcomresearch.com or 866-471-2588.
Mike Zuzolo with Global Commodity Analytics. Mike, always good to talk with you, sir. Thanks for joining us. Have a great holiday weekend. We'll talk to you next week.
You too, Jesse, and thank you for everything, and hope you have a great Memorial Day, and let's remember all those fallen heroes that we lost to save our freedom.
I couldn't agree more with that. Mike Zuzolo with Global Commodity Analytics. That's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.